Everybody right now wants to know one thing. What is really going to happen to the Houston real estate market in 2026? Are prices just gonna crash and burn? Are rates gonna finally come back down to earth from Mars? Is it about to be a 2008 type of buyer's market?
No, God, please, no, no!
Or is all of this stuff that you're seeing all over the internet just clickbait garbage? Well, today we're gonna be breaking down the Houston specific data using real data, mainly from HAR.com, which is the Houston Association of Realtors, plus the national projections. And then, my friends, I'll give you my professional boots on the ground opinion at the very end of the video. And yes, some people are not gonna like what I have to say. Stay tuned. Now, quick disclaimer before we jump on in. Nobody, and I mean nobody, can accurately predict the market perfectly, okay? But, however, we can read trends, okay? We can read inventory and we can see affordability signals. And in Houston, HAR is the gold standard for all of this real-time market data. And that's where agents, brokers, builders, and all of us actually look. So it makes sense to start there. Now let's start off with one thing that everyone is absolutely obsessed with today, and that is interest rates. Now, according to projections from Realtor.com, Freddie Mac, and other economists cited by NAR, which is the National Association of Realtors, by the way, the expectation going into 2026 is rates do not, I repeat, they do not return to 3 to 4%. So anybody who's saying it's 3 to 4%, they're lying. But they're not also expected to stay at recent highs forever either. Most forecasts today, right now, are pointing toward a more gradual easing, not a dramatic drop. Think mid to high 5s or the low 6% range, assuming inflation continues cooling and the Fed starts to stabilize. I want you to think, remember this, rates will always take the elevator up and then they will take the stairs on down. And regarding interest rates, here's what basically all of this means, right? They are no longer the emergency brake anymore, but they're also not the rocket fuel that we had in 2020 and 2021. And I want to hear from you before we move on any further. Do you feel like rates will drop below 6% in 2026? Let me know in the comments. I want to hear from you. Okay, so now this next part is where Houston really separates itself from the rest of the country. According to HAR.com market updates, Houston inventory has been steadily climbing compared to the ultra light, super tight conditions that we've had in 2021 and 2022. We are seeing right now more active listings. We're seeing more days on the market, less frantic bidding wars, and more negotiation power for buyers, which is great news. Houston has also continued building, especially out in the suburbs, which really matters. Now, HAR data consistently shows Houston moving toward a more balanced market, not a total and complete collapse. Right now, as of the making of this video, we are sitting at 5 months of inventory. And basically what that means is, in theory, if no new home ever came on the market ever again, how long would it take to get rid of everything that's currently on the market? And right now, we're sitting at 5 months. Now, 6 months is generally considered a healthy and balanced market. It favors neither the buyer nor the seller. In Houston, we're at 5. Keep in mind though, that is the entire Houston region put together as a whole, including every suburb imaginable, and it will matter the more hyper local you get. Just for, let's say, conversation's sake, I pulled up some numbers the other day for Pearland, Friendswood, and League City, right? Friendswood had a little over 2 months of inventory. And then Pearland and Friendswood are right around 3.5-ish. So it really matters depending on what suburb you are moving to. But either way, we are not heading for a collapse right now. And that is huge because markets that crash will usually have over leverage, they have no inventory control, or they have one fragile industry. Houston, my friends, has a diversified economy, strong population growth, and ongoing new construction to absorb demand. I want you to know this, more choices does not equal a market crash. So please understand that. Just because buyers have a little bit more inventory to choose from at a normal level, right? This doesn't mean the market's tanking and crashing to 2008 and everything's gonna crash and burn. That's not how this works. Anyways, let's talk about prices. So based on HAR trends, Realtor.com forecast, and other regional Texas research, Houston is not expected to see massive appreciation in 2026. But it's also not projected to see a major price collapse either. Most of these projections are actually pointing toward more flat to modest type of movement. Think single-digit growth or something slight softening in some pockets of the areas of suburbs. And it's all highly neighborhood dependent. And its translation in real life, well, that means well-priced, clean, move-in ready homes will still sell. Overpriced garbage will sit. That's just a no-brainer that we're back in a normal market. Sellers no longer set the market tone alone. This is a normalizing market, my friends. It's not a panic market, regardless of what the headlines and clickbait trash want you to think. But I do want to hear from you. Do you think home prices in Houston are going to go up? Are they going to go down? Or are they mostly going to stay flat in Houston in 2026? Let me know what you think in the comments. Anyways, here's what the headlines generally miss. Houston doesn't move as one giant market, okay? The HAR data shows different price behavior by different price points, which should be a no-brainer, meaning that first-time homebuyer homes are going to move a little bit differently than, a $3 million home would. There's also going to be different demand between the inner loop of Houston versus the suburbs of Houston. New construction is going to always behave a little bit differently than resale. And this is why national headlines simply just do not work here in Houston. Houston real estate is hyper local. That's why HAR matters more than the national news media. So my friends, here's my professional, no BS take on all of this. 2026 in Houston looks like a strategic market. It's not a gold rush. It's not a meltdown. It's a thinking person's market. Buyers get the leverage that they haven't had in years. Finally, right? The buyers can finally breathe a little bit. And sellers need to be honestly a little bit more realistic on what they can get, but they can also still win too, depending on what kind of house they have to sell. What kind of condition is it in? Where are they priced? How are they priced, right? Also, investors need to be more selective and not emotional with the types of property that they're trying to purchase, either for fix and flips or rentals or whatever. Now, if rates ease even slightly and inventory stays elevated, we're gonna see more transactions, not total chaos. Houston has always been a long game market, and in 2026, we'll reward people who understand that. So hey, if you are moving within the Houston metro area in 2026, I do want to hear from you, my friends. My team and I help people just like you buy, sell, and relocate to the Houston area every single month. And if that's you, my contact info is in the description box and pinned in the comment section below. You know what to do. I'll see you guys in the next video.